Hello and welcome to the Cobalt Blue Investor webinar. Today we're recording this webinar from our Broken Hill Cobalt Project plant in beautiful downtown Broken Hill. My name is Joel Crane. I'm Investor Relations for the company, and shortly we'll be joined by Joe Kaderavek, our CEO, and the Executive Manager, or also AKA the Technical Guru, Andrew Tong, who will answer some questions that have been posed by some of the investors. First, I'm going to take some time just to give a quick project update, and then we'll turn it over to Joe and Andrew for those questions and answers. I get a lot of questions on what's happening in the cobalt market. Prices have dropped quite sharply since May. Look, we don't think there's anything terribly nefarious behind this. Much like many of the other China-centric commodities, we've seen a pretty sharp sell-off, in part because of the COVID-related shutdowns that affected production and output in a number of industrial sectors, and just probably the slowdown that occurred, the seasonal slowdown in China with slower EV sales. We're seeing signs of that's ending, and I will run through that in a bit more detail during the Q&A session. We've had 5 recent milestones over the past quarter, and I'll run through those in a bit more detail. Most importantly, perhaps, is just the success we've had with the demonstration plant. You can see with the photo there on the left, the decline which goes down between 80 and 100 meters. We pulled out about 5,000 tons of ore up onto that ROM pad, and we're currently crushing that and running it through the concentration circuit now. Produced the first bag of concentrate about 2 weeks ago. A number of bags have come in since, and very soon we will start running that concentrate through the processing plant in town in Broken Hill. All the material and bits and pieces are there, and just putting the final touches on commissioning over the next week or so. DFS is on track. We've had a number of consultants, engineering, construction consultants on site recently helping us out, putting together particularly the EIS and a number of the other field studies, and we're really on track to complete that DFS by this time next year. We've been in discussions with a number of industry players about whether or not Australia can become a battery metal refining hub. Look, we think that there's it's the beginning of a long conversation, but Cobalt Blue certainly has a position to play in that. Should we're able to build a refinery and perhaps even source some cobalt units outside our own project, we become one of the major producers of cobalt, MHP, and more importantly, sulfite in the world, and really could help Australia become one of the powerhouses of cobalt and perhaps even greater battery metal production. Commercial discussions are ongoing. We're in negotiations with a number of parties around the world. Our product is attracting a large interest simply because of where we are, but also the size and quality that we'll be able to produce. Joe will give a bit more detail of that in the Q&A session. And finally, the waste streams project continues. As many of you know, we've got an MOU with the Queensland government, and once the demonstration plant here in town is done running the ore from our own asset, we'll use it as a testing facility to run through some of the other stranded cobalt units that are available around Australia. And with that brief intro, I'm now going to hand it over to Joe and Andrew, who are going to answer some very important questions. Andrew, a question for you. How is the $15 million CMA grant being deployed at the moment?
Presently, the current federal government is undertaking a review of grants, and that is expected to be complete sometime in October from our understanding. There is no due date on that review yet, so it's a little bit up in the air. We have not received the contract with the government on that, so we're expecting that once their review is complete of all grants from the previous federal government, then they'll be looking to execute the contracts and move ahead with that grant. So that's the latest update on that grant. We have frequent conversations with the government and the government agencies around this. At this point in time, we're expecting probably later this year to update the market on it.
Thank you. And just to add to that, so our baseline expectation is probably another 4 to 6 weeks. We'll have notice and then kick off those grants.
Thanks. Look, question for you, Joe. What do you think are the most material catalysts expected before the end of the calendar year?
Thank you. So I think the one around you is the one is probably the key. I think the biggest catalyst in this entire project, and it has been from day one, is prove the process works for this unique mineral. What you see around you on scale, and as Andrew mentioned, running these campaigns of 20 to 30 days, 24 hours, 7 days a week, once that proves up that we can, the process works and we're getting the right efficiency metrics. So efficiency in things like the costs on the heat, the energy side, the recovery of cobalt, etc., but also the output metrics, we're making the right product. I think once we tick both those boxes, this plant and this overall project will largely be seen as considerably de-risked from where it is today. So that's a huge catalyst. I'm expecting that by year end. The commercial partner side is obviously more difficult because we don't have direct control over due dates, but I'm confident that in lockstep with proof of this concept, a commercial partner will fall into place. And just bear in mind, investors should bear in mind the strong tailwind that's currently in this battery space, particularly with the recent signing of the Inflation Reduction Act in the US, where the tax credits that act unlocks can only be harvested if the EV sources their EV materials, their raw materials, from a US or FTA country. So there's a huge tailwind, I think, coming. So that's point two, the commercial partner. And probably more in the 1 year category is some tangible update with respect to waste streams and second project.
Thanks. Well, and just looking at that, coming back to the legislation in the US, do you think that's going to change anything in terms of demand for cobalt and worldwide? And how does this change the position of China?
Yeah. Did you want to take a look?
You go.
Thank you. So the question was the IRA Act, the Inflation Reduction Act. How does that change the demand for cobalt, and how does it change China's position in the supply chain? Well, the IRA is a multi-headed act, clearly, but the section that pertains to electric vehicles is a $7,500 US tax credit, provided a minimum threshold of metal content is sourced from US or FTA countries. So hence Australia is in a very good position as one of those countries. The DRC, Indonesia and other countries, not so much. So it's a really clear hard dollar incentive to be sourcing your product from an approved FTA country. So I think that's a tremendous tailwind because that part of the market is a very small part of the market. Joel, you'll know the numbers better than I am, but it'll be, I'm guessing, 20%, 25% of the market now you're fishing in as opposed to the border rump. What does that leave China? Well, clearly it's all about sourcing new materials with new associated production chains. And the point Andrew made earlier about a separate cobalt sulfate refinery from this particular mixed hydroxide facility and having it located separately means that we can integrate that refinery into precursor and other downstream facilities and create a brand new logistics chain. In other words, export Australian cobalt in whatever form directly to a US or other allied nation producer. I think that's a really strong message.
Well, just on that, Joe, given that you are on the front line in terms of key commercial partners, what are some of the concerns that you're hearing, particularly from the auto manufacturing sector?
So the question is some of the concerns we're hearing. Look, I think there are those OEMs in the market, and I'll be generic here, who have to, by necessity, source whatever cobalt's available, trying to at least put some reasonable level of green and ethical bias to those purchases. But the reality is the cobalt market is so small and is so heavily dominated that you can't ask some of those OEMs to effectively hold production whilst they search for new sources. And also bear in mind, some of those OEMs have large consumer bases, for example, manufacturing and sales back into China, whose consumers may not necessarily be attuned to the ethical nature that Western consumers and other consumers are. But what we are hearing in general is on a 2025 and beyond basis is there is a considerable amount of concern over a looming deficit in this non-African rump of cobalt and particularly in high quality refined cobalt as well. So Andrew and I are part of the commercial team for Cobalt Blue, and we're consistently hearing of OEMs wanting to source that cobalt for their mass passenger vehicle market offering.
Thanks. Moving back on towards the project itself, Andrew, we're getting a lot of questions on the explorative efforts and discovering other products. Can you give us any updates on what's happening in terms of future exploration and maybe some drilling programs?
Sure. The question was on what have we got planned for future exploration programs. A number of years ago, we sat down internally and thought about what other regional opportunities do we have here around Broken Hill. And one of the factors that goes into that is what's the nominal trucking distance. For example, if you find a deposit, but it's too far away and the cost to truck it is more than the content of the metal, then it needs to be excluded. So we've gone through that sort of process and drawn a number of concentric circles around Broken Hill. We've gone through the various tenement holdings, the ELs and so on, and we've got a bit of a short list that we've been working through. I'm not really at liberty to share some of that commercial and confidence information, but we are actively exploring across the region. We're also looking separately further afield, and Joe mentioned looking at projects in Queensland, given that there's a very high content of cobalt in tails there and in ore that hasn't been mined yet, predominantly out of copper projects. We have also been looking in other jurisdictions with some nickel cobalt deposits. Obviously within Australia, they're laterite related, or in overseas jurisdictions with sulfides. So we are active on that front, but obviously right now it's not appropriate to share that level of detail.
Thanks, Andrew. And while I've got you, I'm getting a number of questions on what's our plan for carbon neutral and what sort of operation will we be when we're up and running in terms of doing the best we can in terms of being environmentally responsible.
Thanks, Joel. So the question was around CO2 footprint, ESG credentials, and sustainable mining effectively, if I can paraphrase some of that. What I want to start with my response is linking it back to what Joe was just talking about, which is cobalt and global cobalt demand and the EV sort of revolution that's going on, and what the customer, the ultimate customer wants, which is the car owner. What we see is that all of the EV makers, which are all of the large car companies, have very clear CO2 / sustainable roadmaps. However, all of them are different. Some are targeting 2030, some 2035, some 2040, and so on and so on. Our view is that we need to work with the market on this, both what does our downstream sales contract demand of us, so how do we tie in with those offtake requirements? But we also need to be cognizant that nearly 90% of our estimated CO2 footprint is related to the National Energy Grid, otherwise known as the NEM. The NEM is power from Queensland, New South Wales, Victoria, Tasmania and South Australia on that one grid. And approximately 90% of our emissions from Broken Hill will be related to power from that grid. There's a lot of activity from New South Wales government, from federal government, from the other state governments to increase the renewable energy split or ratio on the NEM. If all of those forecasts are met, then our own emissions will drop because we're taking grid power. In addition to that, we're working in line with our DFS heavily on how we can reuse power at site, so waste energy power from heated sections to put into some of the other sections of the plant. So we're doing quite a number of workshops with our engineers around that. And we're also looking at some on-site battery storage as opposed to having a diesel genset. We're really looking at battery storage. We're looking at battery-powered electric mine fleet and how that may interplay. Now, obviously, we're looking at whether that commences from first year of production or whether there's a transition period using hybrid diesel to begin with. Those are the sorts of questions that we're looking at in our DFS, and we're aiming to have a market template when we release our DFS next year that will cater to these ESG and CO2 roadmaps.
Thanks. I might just step in here for a moment. We're getting a lot of questions because we couldn't hear as well at the beginning in terms of what was happening in terms of the cobalt market price and specifically why is lithium held up while cobalt and nickel have had a pretty rough time over the past several months. The main reason cobalt has fallen is primarily because it's a China-centric commodity where there was a number of COVID-related shutdowns, basically from between April and June, and that stopped a lot of battery production as well as EV demand. And once the price started falling, it's difficult for people in the market to catch a falling knife, and you end up with people just stepping out of the spot market. And at the same time, inventory builds up. So you have a period now over the past couple of months where there's plenty of cobalt around, not huge demand, particularly over the China summer low. But we have noticed the price started to stabilize over the past couple of weeks, and we expect that to potentially stop the fall, and the price is likely to return closer to its longer-term average because it's fallen slightly below that. Why is lithium not fallen to the same extent as cobalt? Again, because it's a China-centric commodity and what's happening there in China. I'm sure we've all seen the headlines around all sorts of climate change issues. What's been estimated is around a quarter of lithium production capacity has been shut down in China because of drought. Simply had to ration power. So when you get a shortage of conversion in lithium, then of course the price is going to remain high because of that tension. So that's the difference. It's really a supply side issue. Lithium and cobalt tend to have the same demand outlook, and given what we know about the growth in EV sales already this year, a bit of a lull because of, like I said, some of the COVID-related issues earlier in the year. That's certainly changed, and we're starting to see demand ramp back up. That's why we're seeing that tension in the demand side. And another question, again, apologies because of the audio at the beginning. Has there been any change in terms of our timeline? How does the production timeline, development timeline look so far?
No, there really hasn't been any change in our timeline since we last went to market in a timeline. For example, ASX releases and quarterlies. We're still on track to have our DFS completed in Q3 next year. We're working really hard on two main business strategies at the moment. One is on the offtake side and the other's on the debt and equity financing side. So even though we're not ready yet to do and sign contracts on project financing, we realise it takes quite a while to get all those in place. So we're working really hard, meeting with groups and working through review and engineering review processes for that, so that by Q4 next year, we'll be ready to move ahead, subject to the outcomes of the DFS next year.
Thanks, Andrew. And again, some more questions on the mine side. Now that the decline is nearly complete, can you run through, was there any surprises in terms of what we saw from the ore body itself as we actually got in there?
So up until this point in the project, and it's not really going to change for DFS, we have a resource block model with spacing of drill holes approximately 15 to 20 metres apart, give or take a little bit. So in other words, where there's one drill hole, the next one might be 20 metres away. What we've done with this underground portal is it allows us to go into the side of the hill and to then take out the ore body between two different drill holes, and then to confirm or essentially validate the resource block model. There's a lot of algorithms that go into resource estimation because they have to interpolate or estimate the material between those drill hole spacings. So if the drill hole's 20 metres apart, they have to interpolate that the ore body is continuous or contiguous or homogeneous, there's many different words I could use, between those drill points. That's a science that is a bit beyond me. I'm just a humble metallurgist. But this mine, the underground mine, allows us to actually go through and take out all the material, measure the faces, send the geologists underground. We've done a bit of mapping, resource mapping under there, and confirm the grade and if it's consistent. What we've found to date is that the ore between one end and the other end of the portal is essentially consistent as we had expected. What we did find, because of the location that we went in, was that some of the surface oxide was a little bit lower in areas and a little bit higher in areas. So in geological parlance, there's a term called the base of oxidation. The base of oxidation essentially says from the surface profile, soil and so on, at what point does the sulfide mineralization start? And in light of no other information, you normally look at your drill cores and you say, okay, that's 10 meters and this one's 12 meters, and you just draw a line between that. What we found with this underground mine was that actually the surface is more undulating, as is always expected, but very hard to model. And so we've got a little bit more information around that. And it's given us an opportunity to then have a look at dilution in our processing plant. So when you take that ore out, there's always a little bit of dilution from the wall effect, from the mining effect. And so we're able to then put that through that plant and see what dilution, waste in ore dilution does to the plant. So far, we haven't found any negative consequences of that, other than what I said earlier today, just around the milling side being a little bit more power required for the silicates.
And how's the concentrate looking, Andrew?
So far on the concentrate side, we're producing fairly coarse grain pyrite concentrate, as we would expect. We're still tweaking some of the recovery parameters in terms of the spiral cutters between the waste and the pyrite concentrate. And we've got a little float cell there picking up all the fines. Overall, the concentrate's looking excellent. One of the key differences, Joel, that this demonstration plant does versus pretty much all the previous work, except for some of the early work 3 or 4 years ago, is that we're taking rock and ore, we're milling it down to that 1 mil size, and then taking all of the particle sizes below that. That methodology of crushing and milling gives us a particle size distribution for a demonstration plant that is much more representative of the commercial facility than some of the samples that we put through our pilot plant last year, which came from drill samples. So when you drill the sample, you end up with a lot of fines by way of drilling and breaking the rock down, whereas now we're taking the mine ore, so a bit of drill and blast, pull it out, put through the crushers, and then we have a much higher, larger particle size distribution versus the historical stuff that was a lot finer because it came from the drill bit. The practical outcome of that is that in our concentrator circuit, we're seeing more pyrite go to the gravity because it's coarser than to the float, which would be finer. Whereas when we did the pilot plant work, we found that the quantity of pyrite in the float was larger than what we're seeing now.
Excellent. Well, congratulations on the success of the demonstration plant so far. That's been fantastic. And I'm getting a lot of questions on, because of its success and the fact that we're going to this next stage, have we seen any increase in the demand from outside partners for some of those sample products and just basically looking for forward sales of our product once it starts producing? Joe?
Oh, look, I think it's still a bit early. So Andrew's talking about successes at the front end. We really need to, and I've used the analogy, the pig and the python, we really need to take all this ore consistently all the way through right into product recovery. We're not there yet. But once we do that, once we have, I'll use the term on spec, either hydroxide or cobalt sulfate on the volumes that we talked about. And an important point I missed before is repeatability of those, of that test work. In other words, a partner wants to see from this potentially 10 kilogram sample today, but again, a 10 kilogram sample again in the future, again. They want to see repeatability because for them, it's all about commitment to a long-term supply source. And these are very, very large dollar commitments, particularly in downstream build. So a bit early to answer that question today, but so far the test work is pretty honest.
Good, thank you. We're nearly out of time, but I got several questions. When will the first sample be sent?
From our demonstration plant, we're aiming to send parcels of mixed hydroxide, so cobalt around 30%, nickel around 7%. They'll be in parcels up to 100 kilos. And on the cobalt sulfate side, they'll be in parcels of around 10 kilos. The difference there represents partly the ease of production in terms of MHP. All of our product goes through MHP, and we're going to produce from the demonstration plant roughly 10 tonne of MHP, and we're looking to only convert around 3 or 4 tonne of that into cobalt sulfate. So it partly represents the quantity of material we have, but it also represents the engineering data that we need to retrieve from this exercise for the feasibility study. in terms of the first product, we will have products available in September. However, to Joe's point, a number of these partners have asked for repeatable samples. So they will receive a small amount in September and again in October and again in November and again in December and so on. And so it's a little bit hard to say first sample. I'm trying to break it down and say there'll be some material going from September, but we're expecting to send multiple samples to one customer, and we've got a number of customers.
Great. Thanks, Andrew. We're out of time. Joe, I would just like to ask you to maybe add some final comments for a wrap up, and then we'll sign off from there.
Yeah, look, thank you, Joel, and thank you, for investors for their patience with the technical difficulties we had. Look, we're in a very intense campaign. Andrew mentioned there's about 35 staff that we have on board, the bulk of those arms and legs here in Broken Hill. What we're busy doing is proving up this process on a very large scale. I'll say emphatically, no one else in greenfield cobalt in the world has made a statement of metallurgical proof of this scale. We have partners ready. We're in discussions. We're in a very good place. I think the backdrop in terms of the tailwind of the politics we discussed is a good place. I think this plant will allow us the opportunity of a second project, potentially a waste stream project or even another resource project. And I'm really excited, and we've just begun the conversation with investors over what a cobalt sulfate refinery will mean to us as a separate business unit and how we can feed more cobalt units to that and create an Australian ethical cobalt brand. So I think we're in a really good place technically. I just ask for a little bit of patience over the next few months while we prove some of this up, and I look forward to giving them some updates.
Great. Thanks again, Joe and Andrew. And apologies to everyone online for those technical difficulties. We'll tighten it up for next time. And any questions that weren't answered, we'll endeavor to do so or send through directly to us, and we will handle them. Thanks, everyone, for joining.